Hey folks, let's get started here. As always, these videos are timely to what's going on in the market, so consider subscribing to them and put on your notifications so that you get it as soon as it processes, because it is somewhat time sensitive. So consider subscribing and notifications. So let's get started. So in the newsletter yesterday, I mentioned that you would see Apple and that you would see it start getting some action. The earnings report, when you went through Netflix, is extremely good for large cap companies, especially large cap tech companies. So you should see, we said you should see this kind of momentum today, and you are. And you're seeing the FNGU up, but let's get through it. So Apple here. I'd like to just note that this is a double top and that you have some small resistance levels here. Now, we did break this wedge and we are pushing higher and volume is coming in. A lot of volume is coming in. So I expect this to challenge the highs and then go higher. And we have a 3 to 4 month base here. Apple, as far as the newsletter goes, I rarely will put it in unless I think it's going to, undercut like a major support like this did, just because there's not a lot of value I can add to it's a $1 trillion company, so it's really hard to for it to really move anything more than what's going on with the underlying market conditions. But this could outperform here and this could move higher. So if you're interested, this is a really interesting place or a really solid place to take this trade, because your stop is really right below all of this. Or you could even use the swing bar as your stop, depending upon your risk tolerance. So definitely start looking at these larger cap tech names that are not social media, but more hardware acquisition, your Amazons, things like that, and semis as well. So anything that goes into a product, large cap, start looking at. So APHA. You have a little flag here. The problem is, here's your bar on the flag. And you can see 3 days ago, we opened here and we closed here. And I'm using open, high, low, close bars today so that we can get a better sense of what's going on. And because there are some exhaustions going on here. So we opened high, closed low. Undercut this after we opened here, undercut and rallied. And here we are, right? We think we're good. We come in and then we sell off. We can't even get close to this level now. So for me, this could actually be forming an exhaustion, and a bigger gap down is very feasible. Now, if I were to be long this, I would look for a break of this, and then I would look on shorter time frames for entry and exit prices, because I'm really overextended here off this $8, 888 level. And this bothers me. And also, look at this volume. Look at this red volume on this day. I mean, everybody and their sister sold. So, something to consider, but that's how I would play it. APPS, candidly, this is not ahead of itself. I mean, it had a clear breakout today, and you can see those levels. Here's your peak. Here's your other peak, right? I'll say this again, another classic example. Triple tops, they rarely exist. So you have a double top, and then when you realize you're going to challenge it, most likely you're going to break out of it. And that's exactly what happened here. So we have our support right here at 47.78, and you can see what happened here, right? And we hit that level right where the 50-day is, and we just kept pushing. And here we are. So I don't have a position in this. I think it's acting exceptionally well. This is a fairly easy trade with a close below the 61.25 level, and then you would want to be out of it. It should not close below this level. This should have some decent follow through. From where I broke out to here, you have 15 points all day long. So there is room for this to run on this breakout. I mean, let's call it 62. You could look, this can go into the 70s. I mean, it can move. And you can see this larger wedge that's there. So that's APPS. BNGO, look, they came out, they priced the secondary within a day, and they found buyers, and they priced it right above their major support, and really where we broke out. And now you see how we're acting, and the stock came down here, broke, now we're right here. So, and we just happen to be, sitting at, a key level. Okay. So keep that in mind. I added to this today. I like the stock, and I like genomics, but I trade on price, and frankly, this should be the low. The low should be put in today. The low of the day will be my stop going forward. We shouldn't break that after a secondary, and we'll get into NIO as well in a little bit, so we can review what's going on there as far as secondaries and what's transpired. We just on DKNG, we just cannot close above this level. Every time it looks like we're going to go, we sell down. So right now, we're really falling below the major trend line and the wedge. So, you had one close, two above it, and the wedge. And what's happened? We failed again. So I'm not in any big hurry here. These are all starting to flatline on DraftKings, and this is not something that I really want to be involved with until I can figure out what it's going to do. And look again, and this does matter. Every bar that stands out, right, from October on, that stands out is selling. So I don't have massive accumulation going on. I have a massive drop in it. And the Super Bowl is coming up. So I don't know what percentage of their revenues on online gambling is NFL, but I would imagine it's pretty high. So, maybe second and third quarter aren't that great. You're adding states, and I'm talking fundamentals, but I'm just trying to paint a picture as maybe this is why we're seeing what we're seeing, and seasonality may exist in some of these names. So something to consider. But here, I think we look great as far as building this huge base, but it's just not something I want to participate in right now. I mean, you have a huge base you're building here, but I just don't need to be in it at this particular time, based upon how many times it's failing and based upon how many times we're seeing these huge sale bars. So fuel cell, all these stocks today are really having inside days. And an inside day is when the previous bar sets the range. And we'll get into all of these, but you still have a trend here, right, where you're forming this wedge and you have this gap up, and now you're consolidating and getting smaller and smaller, and I like that. Support tends to be 1391 and will stay there. Overall, I think it looks decent. We ran up a lot. I mean, a lot from a $2 stock. So this could continue, but it's got to settle down and rest. So GME, I got asked a lot about this one. And what we're saying is, let's get rid of this line, and we'll get rid of this line. And what we're saying here is fairly simple, right? Right down to this level was the open, the 5-day, and we undercut it and then bounced back through it. Our esteemed short selling letter had a meeting today to explain to us why we were wrong. And he was going to explain how short selling and floats really work. The stock has hardly moved, and I think you have to take that into account, right? Your open and close are now higher. I believe I think they're saying it's a 4% change. Let me just check one other thing. Sometimes the data on TrendSpider is a little off. So let me just double check. Yeah, I mean, on the day, I have us down like 36 basis points. So I don't think there's anything from the previous close. So I don't think there's anything to do here. I mean, frankly, I'm building a huge, huge flag in this. And their words, and what starts to happen with some of these short sellers, these gurus, is that their words start burning people so much that they just become immune, and it's only a couple of the people that don't know that start getting involved and then start getting hammered. And this one's setting up really nice to hammer them. I mean, if you close here, you have the second highest close, meaning that this thing is completely blown off already what's been said about it. So keep that in mind. 90% of the shares are short. I don't see how it's not going up unless there's some major some fundamental announcement that comes out. And that could happen, but I don't see that, and I'm very comfortable with the trade. So I do want to get into the indexes a little bit today, and there's a couple key reasons. Let's just look at what's going on here, right? We opened and now we're a little bit lower on that bar. And we came right to the support level, but now we're below that, right? But you can see where we're sitting, right? We're sitting right on these two lines. So nothing's broken. These are starting to roll a little bit, but nothing's broken and we're still respecting it. I would not be a buyer of this as an index, but on pullbacks, as we come down and backfill, and historically, this, as I've been stating, this is a bad time, or it's a volatile time, I think it could happen. So I was asked about this trade yesterday, soup to nuts, meaning what did I see, what did I do? This was a really very simple trade for me. So I came here and we undercut this and then we broke above it, right? And then when we broke above it, I was very comfortable with the move. And the reason being, you have these 3, 4, okay, so we have 1, 2, 3, that 3 black crow pattern, but then we exhaust and then we close above a support level. And I was looking at the hourly and the 15-minute as well on this, and I'll get into it. But what I noticed was, geez, I'd have to undercut this for my stop, and my 50 or my 21 is right here. So I felt pretty good about it. And what we did today was we rallied right to here. My target was 160, but when I saw the breadth getting less, I just blew the trade out and took the profit. So, I mean, the trade was fairly simple, but let's just go and review it. And we'll get into the hourly. Well, that's 65-minute. I want the hourly. So this is kind of how I walked through the trade yesterday, right? So we have this trend that's going down. Here's your break right below these moving averages. They're hourly moving averages, right? This was my target price for the stock. And what I did was we undercut support, it's a pounce. So now that's my low of the day, is my stop. So right here I'm risking, I don't know, I was in at like 142, 143, I'd have to get you the exact price, but I'm risking like $4, right? And it's not a lot. And if it rolls again, I'll go from there. And here we have that little roll in the break, and then we go. But what has transpired was when we ran up today, I drilled down into this because we did have some euphoria this morning. I drilled down into the 15-minute, and then let me find out exactly where we did this. Hold on. There we are. So ran up, forming a little flag. As soon as we undercut this, I had to stop it, right? Because now we're undercutting, and you should be able to see this level, but people ask about process, and that's why I'm spending a lot of time on this, so you can understand the process. So as soon as I can move that over here. Okay, good. So as soon as we do this, and then we undercut this bar, I know I'm at least going to here, and then I could possibly go to here, right? Which is exactly what happened. And I don't really want to go for that ride because I'm looking at this as a very simple trade. I thought we were a little frothy off the open, on the Netflix news, and we'll get to that in a minute. So I just blew it out. So I think I'm in at 143. I'm out at 151. On to the next one. And that's pretty much how I played that trade. And that's why I mapped it out ahead of time so that you guys can kind of see, online how it was done. So let's go. So Netflix, as of this moment, Netflix is doing exactly what it needed to do. And I walked through this on the monthly and the weekly and the daily on Twitter. So it's really important you guys get in the habit of looking at your positions on different time frames. This is breaking out, and this is breaking out huge here. And this could continue to break out. So once we're through that one level that we talked about, this could keep going, and it could be enormous. So this is a bull flag with a 125-point range, right? And we're breaking out of it, as we speak. This was our key level, and we drilled down into this, and we looked at it on the weekly, right? And you can see this, boom, and that's why we're using these high-low closes right now, so you can see exactly where we are and what's going on. So that's the weekly, and then here's the daily, right? So, I mean, you can see why it's important. And where did we gap this morning? Here. And then we sell down to here, and then people are like, oh, geez, maybe it's over. The move really is to drill down into this until it does exactly. And, I mean, this is like, this should be in a textbook. Like, this is perfect. Here's your big bar. Here's your failure. Consolidate tighter, 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 tighter. What happens? Pushes. So, I mean, this is a clear indication that this is going higher. Very easy stop. You can use the swing bar or close below the support level to get out. But that's why it's so important for you guys to look at different time frames, because it really sets this chart up. So you're not in here going, I'm going to buy it here, and then it goes to here. You don't know. It could gap fill. You have no idea. Now we have an idea. Now we have a stop price. We have a support line, right? And we have a stock that's breaking out of a monthly bull flag. I mean, this can go a lot higher. So I would definitely look at this and consider this if you're into buying stocks that are large cap, because this has a lot of movement that could go on here. So keep that in mind. So Overstock, I had a trigger set here, and I really like this one. So here's what we're going to do. Hold on one second. Let's get rid of this. So I really like this one, but we're just not there yet, right? I mean, like every single time you think you're there, it just closes right below a resistance or support, which 62.20 seems to be the issue. And then you even have another one, right? I mean, you can see them. I mean, just like it's almost to the penny, right? So like I'm trapped between this, I'm trapped between support, which is now resistance, and now I'm below this one. So the biggest positive about this is look at how it's consolidating. I'm sorry. So let's go here. Look at how it's consolidating, right? Look at how this consolidates. And I think that's really important. Tighter and tighter. And then we're wedging right here. So if somebody was so inclined, they could use this as their stop. That's a big stop for me, 46, 47. I'm more inclined to watch it break out and close above one of these peaks and then get involved. Because when you have something like this and it runs, right, it's a pretty darn solid move. And that's something that you need to take into account. I personally like this, but this chart should look somewhat similar to something else that we traded recently or talked about recently. We talked about Zoom, and Zoom is one that had a very similar pattern, and then we saw how it broke out, right? So look at this pattern, remember this pattern, and then let's just go from here.
Market data connection lost.
That's just one of my trading systems going off, switching computers on it. So let's just go to this real quick. So we talked about this, right? Look at this trend. Look at how it's respecting this, 380. The minute we broke out of this, we went up, right? And now we're just bouncing along here. This is setting up for higher, right? Once we start getting above one of these peaks, 428, you're going to start seeing this thing really move. And I think that that's important. So let's see what happens, and we'll go from there. But that's definitely something that we need to take a look at, on Overstock. When you clear this level, it's definitely something that we want to be in. So let's keep going. And I hope you guys can see the differentiation in those, but also can see the similarities between the two patterns. So here's plug again. We're just forming this flag. We're not going anywhere. We're not falling out of bed. We're not even hitting lower lows. We're just bouncing around. There's nothing to do here. I would not be in this. I would not be adding to it. I mean, you could really come in. You have these huge gaps, and we did fill some of them, but we're not able to now. But this could, if these roll, they could really roll. But you are seeing a little wedge, not a huge one. You're seeing a little wedge here, right? See how it respects that today? That's the high, was the open. High being the open, and the low where we are now is bearish. So let it trigger. What would be my trigger? Maybe a higher high over here on huge volume. Right now, again, my highest volume is the selling bar. That would concern me. So let's take a look at the Qs and see what's going on here. So we talked about this wedge, right? We talked about it Thursday in the newsletter. Mentioned that if you want to trade this, take the QQQ. Here's your open, right? Here's your low. I mean, I love when people tell me technical analysis doesn't work. But so you can see how you hit right here, right? I mean, you can see this. So our low was 316.51. Okay, and we were at what? 316.15. Okay, so we're within 30 cents on the NASDAQ. And we hold that line, and now we're at new highs. So expect this to continue. Now, that's the Qs, and I would strongly suggest on pullbacks to that wedge line that you look at this, because I've been stating this for over a month now, and I guess if you state anything long enough, eventually it'll come true. But I do think that this is going to lead us, and it's going to be large cap tech, large cap biotech. I've been saying it for a while now, and you're seeing that in some of the earnings that have just recently come out. So let's just keep rocking and rolling here. There's a ton to get through. So QS, to me, this had its day in the sun, and you should be able to see this. You should be able to see this H pattern rallied, right? 1, 2, 3, Black Crow. What happens? Boom, we have this bad day. Okay, some of these are more than others. They're more pronounced. So what happens here? We open, we close, we try to rally, we run right into it, we gap. This becomes support. This gets flipped again. Open, sell right down to it. Never saw it again, right? It just formed that H, and you should be able to see this lowercase h, right? Now we're rolling. Now we're right here below the 50-day with volume falling off a cliff. So you have a support here, but with all these moving averages pointing down and this downtrend, this is like catching a falling knife. That's what we refer to them as. There's no reason to be in this. Just stay on the sidelines. So here we are with SPY, and classic breakout pattern. Looks ready to push. You're going to see this move more muted, as you're seeing today. We're up $2 versus the Qs, which are just ripping right now. With a huge move, and that's significant. You can see where the money's going, and that's where you should put your money. You don't need to reinvent the wheel. You just have to figure out what's the new wheel. So here is Tattooed Chef, and this one, just to be clear, all these lines have been in there for weeks. So, and you can see where these lines are and where they're significant, right? So this line here, we have failed to close above. Support, we're now below. We're below the 5, the 8, and the 21 day. right? This wedge line is next to test, possibly to here, 23. We break that wedge line, we're going here. You're going to 21. You break this, you start getting into the moving averages, which really puts you right around here, right? 20 bucks. So, and then, we keep testing. So this is not something that I feel that I need to be into. This is a classic rejection. Classic. I mean, you can see this level being rejected, and I'll draw that level because maybe you can't see it. But just look at everything over 26.95, right? It's always rejected. So I really see no reason to be in this. If I was truly interested in this, I would probably wait at this point for 26.95 because then I'm above this peak, I'd have this huge cup, right? And then I'd go back into this channel and this thing could really move if that happens. So what I would do is I'd set an alert, 26.95, and go from there. So I'll say it now because it's in the newsletter, and this has happened more than once. I put something in the newsletter close to the open, and then they'll gap up, and I think it's because people are either talking about it, or I'm not sure, but there's something to it, and I just have to figure out exactly what it is. So I just mentioned today when I put this one out there to please let everybody get in. Give everybody a half hour before you start talking about it that it's in the newsletter if they don't subscribe. I have to figure out how I'm going to do this on some of the smaller names. But what we're seeing here is, a fairly simple trade, and it's not working as of now. Now, here's our wedge, and here's our support. And what did the stock do? Went right below support, went right below the wedge, and then bounced up. Okay. If you got stopped out of this today, that's okay, right? I mean, I put it as 3 points. If you're in at 55, you could have gotten stopped out today at 52. It could have happened. That's okay. All day long, I've been playing this because I still believe what I saw. So I want to just get into this so you can understand the differentiation of what will make you exceptional at this versus somebody that just made money in a hot stock tip with someone giving you a buy idea, right? So let's just really get into this and really drill down. So I'm just going to use a 1 minute for now. So here we are off the open. Everyone's excited. It's too far off of our buy price. So there's a couple things you can do, right? You could say, I want to own, I'm just going to pick a number. I want to own 1,000 shares of this. And okay, off the open price, I'm way higher than I'm supposed to be. So I'm going to take a 20% stake in it just off the rip in case this goes to 62, 63 without me, like some of the other ideas have. Okay, that's fine. Stock trades up, right? You think you're doing great, comes back down. You could do a couple things. You could honor your stop on, make your break even on that position. You could come here and use the low as your stop, right? But once you're buying into a huge gap, right, that's this big, you need to understand that this can happen and that this kind of volatility can happen. Now, what's transpiring? We had our levels drawn, right? So we knew what was going to happen. We knew where we were going. We undercut this level. We rallied to this level within pennies. All these levels, just by the way, these levels have been there for weeks. So just keep that in mind. It's not like they're drawn today to fit the narrative. They're there. And there's a reason that I use them is because they work. So, okay, we clip here and then we fail down. So if I was long here and I'm concerned, I'm like, oh, maybe I'll lighten up. So these are nuances that are going to make you a great trader, right? No one, and I say this all the time, nobody trades alike. None of us do. Okay, I know a lot of great traders, and we all trade differently. And it's based upon our risk tolerance and a myriad of other factors. But what you can see is, then we undercut this, right? And then we drop down. But we go to another support level that we already have. What happens here, right? So these are presenting buying and selling opportunities all day long. And I'm just using the 1 day, and I'm going to drill up now. But I mean, when this transpired, there's another technical thing that I use. to determine a divergence between RSI and stochastics. And I don't want to get into it because it's too complicated. But when this fired, and then I overlay other things with it, I'm like, yeah, this should be it. And then, okay, I'll add to my position here, and then this becomes your stop, right? And now what's happening? Consolidating, consolidating, consolidating. I have no idea what this is going to do. Nobody does. And anyone that tells you that is just simply lying, right? We just come up with a thesis, and then we manage the money aspect of it, right? That's what you do. It doesn't mean, and you can even see it here, right? See how this is here? We manage the money aspect of it. I'll just leave this here for a moment. So that's what's important. Money management, risk tolerance, understanding where it could go and where it is. I'll call them back. And let me just wrap this up with this real quick. So here we are in the 15-minute, right? So if you drill down in the 15-minute and this was your stop, you're out. It never looked back. Now we're consolidating, 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 and getting ready to push higher. And then we're just drilling up to look into it. Here you are, one big red bar, failed, 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 but what did it do here, right? So no matter which one of these time frames that you're looking at, you can see what I'm talking about. I hope you can. But these little things, like these little nuances, being proactive, having these lines drawn and ready, is the difference between you owning this at 57 all in, right? And then it going to 51 and you panicking, not having a plan, or having a plan. Even if your plan was 3 points and you lost 3 points today, so what? Next trade. Find another entry into it. Trade's not over, it's just starting. So that's how you really need to look at it. So that's it. I hope that was helpful. Any questions about process or other ideas, just reach out to me and we'll go from there. All right. Thanks, folks.